event. A little bit. But tonight is Wednesday, and if you're a premium listener, if you're a premium subscriber of mine, you know tonight is triple roll, baby. And hopefully by the time you get this, we're all making good money because triple roll Wednesday, very high probability trade that we make every Wednesday, and you can check out that on my website. But getting back to the markets again, so the GDP estimate coming out of London. We do have other reports coming out as well tonight out of Japan, money supply, I believe, current account, machine orders, but also out of Australia. I think part of the reason maybe why the Aussie really sold off, they're only looking for 10,000 increase in employment data out of, and I think they were looking for an increase to 4.1% on the Australian unemployment rate. So that's certainly not going to be very good if that number's worse. But that's at 9:30 p.m. Eastern. So I would look. That's certainly a market-moving event, MME, baby. So be on the lookout for a sharp move in the Aussie on any number that's higher or lower than the estimate. We pretty much, I think, have a lull until we get French industrial production, Italian industrial production. It doesn't make a difference because there's one big event coming, two big events coming tonight, or really tomorrow morning. That's going to move our market, and that is Mr. Trichet at the ECB. Big question: will he maintain? Will he maintain his hawkish stance? It certainly makes sense. The man is all about price stability. You know, our Fed wants growth and price stability. The ECB mandate is simple and plain and clear. Price stability. Eurozone inflation is running at 3.5%. The man cannot cut rates. The IMF has got balls saying today, the IMF basically said the Eurozone should be cutting rates to help out the world. Trichet is not going to do it. The only way he's going to do it is if we see a dramatic downturn in employment, we see a dramatic downturn in Germany, which we're starting to see. German retail sales this month was horrible. Factory orders, a lot of numbers out of Germany, really bad. So maybe he's going to talk about that. And I'd be very curious. It's not the interest rate statement that's going to be important. It's this 8:30 a.m. Eastern, his 8:30 a.m. Eastern press conference, and where he takes questions. He's so defensive, it's unbelievable because he's coming under attack, and it makes sense. But I got to tell you, I have a lot of respect for that man. Holding on. If you remember back years ago when the U.S. was cutting rates down to 1% and the ECB was stuck at 2%, the man held the line. The man held the line, and he was right in doing so. And I think he's going to prove to be right once again. So that's going to be very important to see what his statement is. Does he have a little bit of a dovish tone? We had a move in Euro Sterling, new multi-decade highs. I got to tell you, people, this is a classic setup of sell on the news. You know, if the Euro Sterling, Euro Pound rallies after his statement, you know, or rallies into it, and then he's hawkish and maybe delivers a little bit of a dovish tone to his Q&A, the question and answer, you might see a nice reversal in Euro Sterling, maybe even a reversal in the Euro. But if you take a look at the chart we see up here, this Euro dollar takes out 159, people, and it is just gone to the moon. You see this level right here? We take out 159. If you measure the move, and what strategy one thing is you measure the downturn, we came in from 159 down to 155. We take out 159, say hello to 163. You think the Europeans are bitching now? Wait until the euro hits 163. It ain't going to be pretty. The other big event, news story is London is supposed to cut rates by 25 basis points down to 5%. I guess it's pretty much widely anticipated they're going to do it. I think it's about 70% of economists pretty much believe it's going to happen. I believe it's going to probably happen. But I have to tell you, the data coming out of London over the last 2 weeks have been very encouraging. Retail sales, industrial production, manufacturing, very, very good. So, you know, yes, the housing data is bad, but you have to understand the problem in London. They can't get a mortgage. Do you understand in London they get approved for a mortgage and it lasts for 1 minute? 1 minute! You're sitting at the table, you're trying to get your mortgage. Okay, sir, you're approved for your mortgage. Okay, 60 seconds. What the hell's going on over there? So they can't find money for people that deserve to get it. Maybe, you know, putting 10% down, 20% down, you have good credit, they still can't get a mortgage. So yes, that is a big problem, and I think the MPC, Monetary Policy Committee out of London, is going to talk about that. But I think basically the statement is going to be kind of hawkish. Remember, they have price stability also. They have an inflation mandate also, and their inflation is running way too high. And, you know, Ben Bernanke